I go back to how we've invested in the last 2 years. The biggest challenge is if you're an owner of a business or a CEO making a decision, you didn't think it was the best time to sell. And as a result of that, also if you were buying, you had no clarity, a volatile environment, no clarity where the rates were going. And so maybe this was not a time to pay high prices. So that bid-ask spread has kept the market below normal pace. We were able to invest, as I said earlier, and find value in those markets. But clearly, since December, you've had the beginning of a kind of reckoning time that the next cut or the next rate movement is going in one direction. And I think this is pretty much an investable environment. And activity has picked up. I wouldn't say that the increment or the amount of any rate cut determines the activity volumes. It's more the direction of where the market is going that has changed for the last 2 quarters already.
All right, so maybe a more direct question for you is this. I mean, obviously, you've had a good success in terms of fundraising, right? The opposite end of it is with rates starting to come down, is that going to mean it's going to be easier to exit your investments, some of your investments, and make money?
I think that's right. I think that confidence and that bid-ask spread that I referred to is largely getting easier, and you're seeing more activity on the exit side, you're seeing more activity on the liquidity side, and that we think is going to be the surprise of the second half of the year in private markets. Again, remember that we invest for very long periods of time, and we're able to exit assets through all the different avenues, so IPO, strategics. One other area that is beginning to take place, which you alluded to, Martin, is effectively dividend recaps. The credit markets are supportive, and for the right assets, you're being able to refinance the expensive debt you may have taken over in the last couple of years if you needed to go to market, if you needed to expand. So dividend recaps is another source of liquidity, and we believe that's already measurable on the second quarter numbers as they come through. So private markets have liquidity, will continue to show that, and on the exit side, we'll be the beneficiaries of that, yes.
All right, and where else are you seeing opportunity, Juan?
We are very, since we're having this conversation here, I'm calling in from your Hong Kong studios. We're very active on the renminbi side in China. We've done a number of secondaries. There is clearly value there, and not all investors globally are equally bullish about that, and so that's been an area of activity. Throughout Southeast Asia as well. Again, using the secondaries, one of the tools in our arsenal. And then, of course, the US and Europe, which are the largest markets. So we've been quite busy.